Good evening, everybody. Yeah, unfortunately, we're going to miss that. I think here in Pittsburgh because I think we're all cloud covered. Last night it was foggy enough that all the big new houses they built across the street, across the road, are see them dimly through the fog. Oh, is that where you can watch it? All right, David, thank you. I thought Sandy said this was an occurrence that happened once every 800 years if they line up like this. Okay. A good day in the market. There was two things that kind of dispelled this knee-jerk reaction, or that made it feel like a knee-jerk reaction from the get-go, was that a lot of stocks that were opening lower. Well, I'm going to try to stay around to see the next one. A lot of these stocks, or a lot of the stocks that we were trading opening lower, just immediately started trading higher again. So the important factor was, well, I guess these charts don't show as accurately where everything would have opened, because as the Dow opens, each stock opens individually. Means they start off with a few of them opening and then more and more, and that's what drops it. But it shows it open here. But they took it down. I guess the futures were down 700 points at 4 o'clock in the morning last night. And as you can see, they finally closed up positive on the day, which gives you two things to at least think on a bullish measure. Was that they did bring it back up, which is what everybody in the world is going to see. And secondly, they closed back up above the T-line. And more accurately was the NASDAQ that opened way down here, traded off, and then came back up. So this is again, the benefit we have with candlesticks. As soon as it started trading positive, it told us two things. Well, first of all, the candle turning green told us there was buying going on after the open. So it wasn't like, even though the NASDAQ was down at that point, I forget what it was, 150 points, that we could see green, that they were buying. And that kept a lot of our stocks from, or with that, and seeing that a lot of the stocks that we're participating in opened lower, but immediately started trading back up again. So with that, tonight I'm going to kind of go through a lot of observations, and I've got a ton. I'll try to go through them fast, but I've got enough that we're probably going to be well into the evening, so that when we do stocks, we're probably going to have to limit everybody to one choice. And hold on for 1 second. I'm going to get. Whoops, I've goofed up. Hold on, I'm getting something straightened out here. Yours is a red dragonfly. That means it probably showed that it opened up here, traded off, and then came back up. But in either case, they told you they brought it back up above the T-line, or they closed above the T-line. Let me do this just to make sure, because what happens is a lot of these chart formations are based upon the the feed that they have. So some feeds are based upon how everything opens. Yeah, that's the S&P 500. No, the NASDAQ looks the same over on this service. Yeah, they look the same. So anyways, the conclusion we have to come up with, as long as they can't close below the T-line, we're still in an uptrend. Now, I'm going to start with kind of a promo, because one of the things that we have too many people asking is, should we be buying up here? Is this a good place to buy? And Mike, whose charts are you using? So we always get people asking, should we be buying here? Schwab, all right. Again, it might be a function of how their feeds work. But it doesn't matter what the signal was today. In both cases, or in all cases, they were closing back up above the T-line. So this is what we're going to have as far as a session coming in right after. We may do a Saturday session on trade setups. This is what we're looking for, not when they've already started moving. This is just kind of an example. What we should be looking for as far as the beginning of an uptrend. So as you can see, they took, this is WWR. The reason we've been looking at this is we made some money over here, we closed it out, and now we're getting ready to get back in, or as a matter of fact, we started buying back in over the last couple of days. A little bit aggressively because we were buying in here. And then it faded on Friday, and today it opened lower and came back up. But you can see, I'm going to sneeze. And I did. That this is where you can start seeing buying coming in. Stochastics in the right place. Thank you. Now, after hours, it's trading up here. So this becomes buying, and now they're gapping it up. The reason this is an attractive chart is one of the things that we want to be looking for in our buying is if we've got a good buy signal, should we be going to produce a good profit? Well, if the move from here to here is 4%, you probably don't want to waste your time and effort. If the move from here to here is 50%, that's what we're looking for. We're looking for the things that are going to produce some good profits. Would we still buy even though it not closed above the T-line? In this case, we had bought. We watched here to see whether, if this had been a bearish day, that would have told us the downtrend was still in progress. The fact that they opened it and showed buying again kind of was confirming that they were buying down in this area. Yeah, right now I think it's up at 530 bid, 535. So it's going to gap up. Now, why is that significant for this chart? Because if this moves back up just to even test that level, you've got a good 50, 55% upside potential. So I guess the philosophy is that a bearish harami? It would be if the stochastics were up here. We're down here. We're just starting. So it was kind of a bad hair day yesterday or on Friday. And so if they had closed this down here, we're about where it opened today, we would have closed out the position. The fact that they're now, and so this is why I'm kind of illustrating this, that this is where you want to start watching to see, is this the bottoming action that even if you didn't buy on this day and you watched this day and then you watched this day, what can you see is happening down here after kind of a evening star signal? There's some buying going on. And this is the area you want to be more conscious of. You've probably heard me often say when somebody's looking at something up here, say, can we be buying up here? And the answer should be no. You should be going back to see where you should have been buying. Now that is kind of the scenario in this one, is where should we be buying? We should be buying down here, meaning looking for a buy signal setup versus asking whether we should be buying up here. All right, so we're going to have a lot of different elements of observing the obvious. So we've got things like blink, that you can see the wedge formation. I guess I could draw the lines. You had that wedge breakout. Now, what does the wedge breakout tell us? Number one, we can see kind of a bullish signal right here breaking it out. And two, if we can see buying at the appropriate place that everybody else is buying, that gives us a little bit of a head start to be buying in here instead of a lot of trading strategies start buying up here because it's confirming. If we got a buy stop at 520 triggered a buy for January, I've got a buy stop at 520 triggering a buy for January 7. Okay. Or Jim, if you're sitting here watching it, don't unless you're happening to be away from the trading as the market opens, yeah, you can put the stops in. But if you're sitting here watching it, now you just say, all right, it looks like it's triggering. Let me see what better price. Because if they're going to buy the calls of the 750 calls based upon your contingency order that if it trades above 520 you want to buy, well, they're going to whack you probably at the ask side, whereas you might be able to go in somewhere between the bid and ask and get a little bit better price. All right, so we have the same scenario for fuel cell. You can see there's a wedge type formation and a slow curve, and there's the fact that it was supporting on the T-line, and it's breaking out. So that was the call recommendation there. Today, a lot of people are asking about this one. And I guess we should, that's not right. You can see there's a wedge formation on this one setting up. So if this one, just visually doing what you can see everybody else is probably watching, this one breaks to the upside. That tells you wave 1, wave 2, a wedge going into wave 3. Now, what does this do for us as investors, candlestick investors? It just gives us a lot more clear indication of what's happening at a pattern like a wedge coming to a pinnacle, getting ready to buy or be ready to buy on the buy side. I mean, that's kind of a redundancy. Getting ready to buy when it's a time to buy. Now, these are now out of place. I don't know why they stay from chart to chart. All right, we can see what's happening in Upworks. Ever since it broke out with your best friend, then consolidated, now you got that fry pan bottom moving in the right direction. Now, the reason I point this out is if we can find things that are showing patterns, we're going to have much better probabilities that those patterns are going to move the price in the direction we expect it, number one, and number two, with much greater magnitude of a price move versus just kind of a slow uptrending stock. I lost money on PTR today. I bought this morning with a 525 stop loss and got stopped out, but the wick never reached that price. one big figure, if it never reached that price, you got stopped out at 25.25. That was on PLTR. That the low was 25.40. You were 25.50. Yeah. Well, there's two things. Now, first of all, did you buy today, or if you bought today and you got stopped out, here's the one thing that has made me a lot of money. Digging through the ego of getting stopped out, and then it starts back up. And my first thought is, oh, they're not going to let me or get me back in so they can turn around and take me out again. If I see something where it's not working and I get stopped out, and then I see it working again, I'll buy back in. So I missed out on 68 cents, but I wasn't buying it for a 68-cent profit. I'm buying this one for hopefully a 20-point profit. So if you get stopped out and then things reverse, yeah, go to your 10-minute chart and see if they're buying. And if I had bought and gotten stopped out, and then saw it come back up through the open again, you can see the green candle forming. Yeah, that's when you kind of jump right back in. Are there times where I say, shoot, this cost me an extra 65 cents? Yes, but at the end of the trade, if I'm up another $7, that 68 cents was just the cost of doing business. Let's see, I'm going to skip around solo. You can see is kind of a double bottom, slow curve bottom, back up above, and kind of breaking this downtrend. So solo is a sector like NIO and GP. These are all stocks that I will probably be recommending not only on a short-term trading basis, but on a longer-term trading basis. Because if we can kind of factor in that they've exploded, consolidated, and now the reality or the true, I want to say, investment prospects are coming back into these, that probably over the next few years, this is going to be a sector that people are going to be paying a lot of attention to, obviously. And here's another one, LI. Now, some of these are Chinese stocks. They're also under the threat from Trump to knock them off American or U.S. Trading exchanges, but that doesn't change the fact that they still can't be bought on other exchanges if that ever happens. Right now, I would be buying these until something sounds like more definite action is going to be taking place. So the reason I always recommend people learning the patterns is look at the J-hook pattern on MGNI. We recommended this one because you could see the J-hook pattern setting up. That's usually an indication that we're in the next wave. We could also add to the analysis sandwich. And what do we expect from a doji sandwich? More upside. So if we've got a pattern setting up and we got a short-term signal saying there's going to be more upside, that's just additional confirmation we're likely to see this pattern work effectively. Same thing with Perry. You can see how they pulled back right to the T-line after this strong price move, consolidation, and here's where the T-line works. There's a very efficient indicator of human nature. They couldn't close this below the T-line, which we could see. We could see the investor sentiment was changing back up. So what's our upside potential? Well, if this was a, let's see, 5.5 point move, a 5.5 point move is going to take you up into the $18, $19 range. What I'm also going to be setting up is what do you do on big breakout moves? And part of that is learning that a big breakout move isn't something necessarily to let's say hesitate upon, because you're going to get a lot of people say, well, I don't want to buy a stock that's already up 28, 40, 60%. You do because it's broken out and it looks like a big fry pan bottom setup. If I bought on this day, I would have been nervous on this day. As a matter of fact, I might have even closed it out on that day. But when they started bringing it back up through the close of that original day, what that whole scenario tell us? This big breakout move had profit taking. Now the profit taking is over. Look for more upside. And we'll do a study on that of showing how often the big breakout is an indication that something has changed in the assessment of that that stock or that company. And it's usually an indication that there's going to be a lot more buying coming in. Now, back to the J-hook patterns. This is what's really providing a lot of profitability during this price move. Tim, so you can see what happened here. J-hook pattern, still moving strong. And look at what happened over there the last 2 trading days. There's your double doji. Opened and continued higher, probably implying there's going to be some more upside. Isn't this a Chinese stock? But you still have that same scenario. It may drop back tomorrow, Tim, but that's why you want to see what it does. If they open this positive and start trading positive, that means there's still going to be a lot more upside price move. If it opens here, you don't go after it until they come back up through this level. All right, let's see what else we got here. Oh, this is just happy. Look at the J-hook pattern, right smack dab off the 50. This is what puts you in the right place at the right time. Now, here's the benefit of a chat room where everybody's kind of looking for the same signals or patterns. Late this afternoon, somebody said, oh, look at VDLR. It was trading right about here, which told you there was a J-hook pattern setting up. So we started buying. Well, 15 minutes later, it was trading up here, and I think after hours, it's trading up here. So with people seeing that this was a J-hook pattern setting up and mentioning it, allows you to kind of enter trades at the appropriate time without having to have a scan or having to scan everywhere to find these. This is why that many eyes looking for the same things is very beneficial when we're all kind of looking for the same type of patterns. Joel, let's see, I'll bring up Cohoog since it's one of the ones. Right now, if you're long, you can stay long. Now, because you've got Doji, Shooting Star, Dragonfly Doji, if this opens positive, what's it telling you? That this indecision is over. They're breaking out through this level. Oh, so back on VLDR, you could buy the calls or you could buy the warrants. Well, shuzbutts. I don't know why the warrants wouldn't come up over here. But take a look at the warrants. They're trading in the $8 range. And Lithium, left-right combo, look where you're sitting, right here. What's your trend? Steady uptrend. Stochastic's not in the overbought area. This one can be bought on positive trading because it's still implying there's going to be more upside. And with the left-right combo, you might change the trajectory into this direction. Warrants are kind of long-term options. They're tradable entities where it's usually handed out to people in the company that instead of them saying, all right, you can buy, now that we've made you an officer, you can, if you want to buy the stock, what would do is give you kind of a long-term option, which would be a warrant, which would say you could buy that stock at X number of dollars 2 years from now. What is the danger in trading warrants? Nothing. They're just kind of, you probably have a time frame, but it probably is not going to be a time frame that's going to affect you. You might look and see that the warrants might expire in 2023. Well, it's 3 years down the road. It just gives you a little bit more leverage. Big figure, no. I use stochastics because they work well. You can put RSI on here, and MACD is kind of a lagging indicator, so I've got it on some charts. It won't overlay on this one, this chart service. So how do find warrants? Usually with the same scans that the warrants show up just as well as the stock. So when I did my scans tonight and VLDR showed up, a little bit later the warrants showed up because they had a big percentage move. Obviously a bigger percentage move. Yeah, we did blink. Blink is still in this pattern. And probably want to stay, I've got Blink right now in short-term trading accounts as well as long-term accounts. And I think that's going to be one of the major factors as far as supplying the electric cars with places to recharge their batteries. Let's see, we did Lithium and SYRS. Showing this one because of this right here. This is where you put everything together. You can see there was a best friend gap up through the 50 off the T-line coming out of the oversold area, and the next day they broke through this resistance level. This right here is your energy source. Oh, Blink has warrants? Okay, I don't know whether they will come up over here or not, but I'll try. No, BLNKW. No, for some reason they don't come up right here. That's up to each. Oh, that it there. WW. No, that doesn't. That's all up to each individual. You can buy the stock. If you want more leverage, you buy the warrants. But obviously, the warrants are going to move a little bit faster, meaning they'll move up fast and they'll move down fast. So it's just a little bit better method to leverage your funds. All right, so fry pan bottoms are working. Look at your classic pattern on Kirk. Still holding this one because, as you can see, it's never closed back below the T-line. And Billy, ever since the little scoop type J-hook pattern, Not hard to assess this one. It's not only trading above the T line, it's staying above the 3T line. On the short side, same scenario. As long as something's staying below the T line, like CPA, you stay short. ADS, same scenario. So this was one where you do what I say, not as I do. I covered my short positions right here because it looked like they were popping it up. But at the end of the day, it brought it back down here. And I didn't re-short it because I moved to something else. But this is a perfect example that if you see a sell signal and a close below the T line, you just stay short until you see a candlestick buy signal and a close back up above the T line. Yes, and I don't know, and maybe it's because I've never looked at warrants over here, Gary, that they aren't coming up. So, just they aren't coming up. So, when is it time to cover short positions? Well, for crying out loud, I'm just typing in here like a... When you start seeing in the oversold area, start seeing some buying, and that can be seen also, even though you haven't closed above the T line, you can see there's buying going on down here. So what should that tell you immediately? That your downside probabilities are getting smaller. You might be more apt to now close a short position. Okay, I'm going to go through the biggies real quick because there's nothing there. Amazon, just absolutely sideways. Apple, if you're long, you can stay long, but you can see the trajectory is very slow. Netflix, still a very slow upward trajectory, but Nvidia, just nothing there at all. So, is Apple up after market? All right. There's quite a few things up after market. I think when I looked at VLDR, it's trading up here at 26.60. And again, watching WR, it was trading up here at 530, 535. Is that still the case? That's not what I want. That's not what I want. We did Perry. Oh, the J hooks. You can see the fry pan bottom J hook, and remember what we have as a kind of a truism. The bigger the signal, the more compelling there's been a change of investor sentiment. So I'd look for a J-hook pattern off of this one. Well, that's a fine howdy do. I wrote it down twice. Tusk. There's a J-hook pattern. So the reason I want to point out the patterns is, again, I try to illustrate the fact that the patterns are going to give you much higher probabilities of moving in the right direction and with a much greater magnitude. So you can see CPST, classic pattern. This one can be bought on positive trading tomorrow. LAZR, another J-hook pattern. The consolidation, and this is where the old rhetorical question, where do you grab for a fallen knife? We can see pretty much when the selling has stopped with a bullish Harami doji. Up, okay, 538. And then the fact that they gapped it up through the T line, That tells me there's still a lot of strength coming into this one. AQB, we pointed out the other day. Look at kind of your little morning star signal. Same scenario. Nice J-hook type pattern, classic pattern. And the classic pattern is that fry pan bottom with a strong price move. The prerequisite for a J-hook pattern is a strong price move with consolidation. And the reason we can see a J-hook pattern much more easily than most, practically all investing techniques, is look where it kind of started trading indecisively. First of all, we can see it's trading indecisively. Secondly, we can see it's trading indecisively right at the T-line, which makes it much more clear for us, but that's the natural support level. Get ready for the next price move. Is this a cradle pattern? Not really, no. Cradle pattern usually is a flat bottom, but it's still illustrating indecision. Oh, yeah, that was kind of not so much a J-hook, but what we call the little slow curve, and then the breakout. Let's see. So there's another J-hook pattern, CERS and SMEGMO, also a J-hook pattern. Look where the profit taking ended, with that bullish harami and then starting to bring it back up. Now, this is JP Morgan. It's a good chart in the sense that it could probably be traded, but when you start seeing, this is just kind of a general observation, that when you see the banks or the financial companies trading strong, that means the market is likely to continue to trade strong. And that's Goldman. This is Morgan Stanley. So they can be bought, but it's more of an indication that that investor sentiment is coming back into the market. Is this a classic pattern? Yes, you can consider that a classic pattern. All right. Whoops. There's that slow curve. You're right here at a breakout on NMDM. Wouldn't be afraid to buy that one on positive trading. You can kind of see the pattern set up on this one. And oops, IEA, J-hook type pattern. Look for it to come back up into this trajectory. CRISP. You can see what's happening here, another breakout. Look what happened here on this breakout. So you got wave one, kind of a wedge formation. Now wave three starting. And darn, I had another one that looked just like it. I'll come across it. J-hook pattern on clean energy. PIC was another strong J-hook pattern, gap up. Look for a 45 degree, the same trajectory off of this, especially with your best friend gap up. Well, oh, the edit was it. That's right. Edit, kind of a little wedge breakout. So there's your classic fry pan bottom, J-hook pattern. Look for more upside. A classic pattern is this, Shirley. Fry pan bottom is one of the Japanese patterns. It's like a slow fry pan bottom, but it's essentially a buildup of investor sentiment And usually right at this level where the pattern starts, that's where the breakout is. Now we can much better identify the breakout because look at kind of a doji sandwich breaking out through that level. Now we know what should happen after a fry pan bottom breakout, a strong price move. But then the classic is, after a strong price move, they consolidate it and do a J-hook pattern. So it's the combination of those two patterns that is usually going to occur as a good combination. SOL, another J-hook pattern with that little gap up. Yeah, but nothing there yet. You don't have anything showing this trajectory yet. I mean, you can keep it on your watch list, but there's nothing at this point that would tell us that it's getting ready. Now, here's another one that's starting the next wave up. E. Mavis. Now, this is an illustration of a fry pan bottom breakout. You can see, look at the little slow curve right here at the breakout, and notice what they did right here at the breakout level. They gapped up through that level. So a lot of people say, well, I don't want to be chasing a stock that's, in this case, it was up 15, 20% that day. You do if you recognize the pattern, because this is your expected results. And this is why you want to watch to see what everybody else is watching. Genco could pretty much draw a resistance level down through the tops. Now you had kind of a strong signal here and broke up through this level. This is a good indication that you've gone from wave 1, wave 2, now going into wave 3. Is it too late to get into Mavis? Oh, Harry. This stock has gone from 250 to 570. It's in the overbought area. To ask that question, the answer should always be, yes, this is too late to get in here. It's had a huge price move. So what should you, there you go, where should I have gotten in? This is why you want to start getting your eyes acclimated to the patterns as they're setting up, so that you're not asking whether to buy here. You should be asking, should I get ready to take profits here? So this was the buy area. You could see the kind of the fry pan bottom, the slow curve, and then the breakout. This is why we're going to be going through a Saturday session of getting prepared, and I've got them down here. We're heading for them, of the ones that, how to get your eyes acclimated toward buying at the appropriate time. This is why I was kind of stressing this one, where we can see the buying starting. Now it's gapping up. That's where you should be buying. There's going to be a lot of people, when they see a chart like this, they're going to say, can we still be buying here? And that's where I always go back. No, you should find a setup that looks like that, so that you're buying at the hopefully the bottom and a much lower risk situation. The steady eddies are what you want to get stuck in. Once you see that buy pattern breakout, now you know to stay long. I don't know what that is, as long as it stays above the T line. So this is why I always recommend having X number of positions in the portfolio, so that if you do get stuck in, hopefully, good, strong chart patterns, that you don't have to make a decision. You say, when I look at this as one of my positions, say, nothing wrong here, just hang on. That's about the extent of the analysis that you can do on most of these steady eddies. Because we got one very simple factor. You stay long as it stays above the T-line. This is the one the cat recommended. Meow. Again, there was your breakout. There's your 45 degree as long as it stays up above the T-line. And CNST. Just stay long as this stays up above the T-line. Hold on to your individual ones until I tell Jim to do the double line. I'm trying to rush through these. I'm going to try to get as many observations. There's the J-hook pattern. That's almost what you would call a cradle pattern. And just the terminology, that could be a morning star signal or a cradle pattern. And I usually name them that if there's 2 indecisive days and a big day, it's a morning star. If it's 3 or more, it becomes a cradle pattern, but they still illustrate the same thing, that after indecision, that now they're starting back up. Detail, this is observe the obvious. Look where your bullish harami occurred, in the oversold area, right smack dab on the 200, which is where everybody else was watching. As a candlestick investor, you have the advantage, you know what that signal is. That pretty much tells you the selling has stopped. You could be buying. Now, should you be buying before it gets to the T-line? If you can be buying here, knowing that if it goes up to the T-line, you've got a 28% upside, yeah, that's still a good trade. Then you just watch to see what happens once it gets to that level. IPOC. There's your fry pan bottom. There's your little scoop type J-hook pattern. So just recognizing this little quick flat handle and then the scoop puts you in the right places at the right time. Look what happened today on PTAC. There's your kind of little scoop pattern, and notice what moved this one up. A kicker signal. So not only do you have a fry pan bottom with a J-hook pattern, but a scoop pattern starting with a kicker signal. That's an extremely high probability trade that's going to continue to trade higher. So just kind of pointing out that there's a ton of good charts and things that we're going to be doing in our, what I call the observation training. Observe what happened here. What happens when they break through a resistance level? They'll come back and test it to see if it's going to act as support. You can see what happened on this one today. Came back to the 50 in the T-line and came back up. What's that immediately tell you? They aren't taking it down. They're using the T-line as support. Expect more upside. Okay, so what we're going to be looking for are the setups. You can see where the setup was right here. Look how it came up through the 50, pulled right back to the 50, and then he supported there. That's what started the next price move. That's a good trade setup observation using candlestick signals. BCYT, doing a bullish left-right combo, right smack dab off the 50. If this opens positive, what are all the things that we can put into our analysis? A bullish signal coming from the oversold area, bouncing off the 50. If it opens positive tomorrow, what's it telling you? It's confirming the Morningstar signal, left-right combo, and telling you the T-line is not acting as resistance. More than likely, you're now in wave 3. Look down here, same scenario. Doji gap up right off the 50 through the T-line. Positive open the next day, what's that tell you? That this is not acting as resistance, this isn't acting as resistance, and this best friend signal tells you you're in a good positive trade. How soon after open is it okay to trade? Matt, it usually within minutes. So if we wake up tomorrow and the market is trading positive, and this is opening positive, probably within a couple minutes, I'll start buying. Let's see. Whose handwriting is this? So this is what we want to kind of get everybody acclimated to. Not asking whether you should be buying here or here. Looking for the places that are the appropriate levels to start buying. And letting each person come up with the specific patterns that they recognize. Look at our McMuffin right here. So again, look at all the things that we can put into our analysis. You got a trend channel, got a morning star signal, followed by a doji sandwich McMuffin, up through the 50, up through the T-line, kind of a little scoop pattern. Where do you think your next likely target is? Up here. So this is just kind of high probability trade setups. So look at this trade setup. What are all the things that we can put into this analysis? Stochastic's coming back up. Kind of a little morning star signal right off the 50. A close above the T-line. And a trend channel right here. Or a wedge that if this opened positive, that's a high probability trade setup that we're going back to the top of the channel. Harry, yes, I know. Yeah, you can watch this one. Same scenario, left-right combo bouncing off the 34. If it opens positive, it's confirming your signal and telling you the T-line's not acting as resistance. All right. The nice thing, though, about this market is that it's slow and steady, but it's ATRA close below the T-line to use sell. Why don't you use the 21 or 17 EMA? You can use whatever you want if you study that the 21 and the 17 work effectively, go ahead and use it. The nice thing about candlestick charts is that these are the important factors. The signal, reversal signal itself. Then anything you add onto the chart should be acting as confirmation to improve your probabilities. DraftKings, DraftKings has run out of steam here. If you're long, you could stay long because it closed back up above the T-line today. You could still be buying this one on positive trading. All right, so here is the strong element to this market. Just the fact that the NASDAQ has continued to trade higher during all this time. And remember, statistically, as long as they're closing above the T-line, the probabilities are still in the favor of an uptrend continuing. Okay, so that's about all I got. Are there any general questions on candlestick analysis? ATRA, close below the T line. Do you sell? If I was buying on positive trading and then it closed back below the T line, yes, I'd close it out. Because what's the whole point of this analysis? That we should see an uptrend. And what would confirm our uptrend? Close above, positive trading closing above the T line. If it opened positive and then closed back below the T line, what's our statistical probabilities? We're not in an uptrend. Close it right out and get ready to find something better. When the market opens down like today and a stock starts out significant lower that day, will you let it drop a little before dumping in case it's going to come back up, or do you recommend dumping as soon as it opens? John, with the magnitude of the, and expecting this was a knee-jerk reaction today, I held on to everything, which didn't take very long to see that things were starting to trade positive immediately. So I just kind of held on to things. I did close options on Kohu, but I didn't close the stock. And the reason was after a big shooting star and it was trading down here, it would really have to come up significantly to keep it. So obviously with the options running out of time, I close it out. But now it becomes another buying situation if this starts breaking out to the upside. Is the offer of 3 books on candlesticks which can buy? All right. Yes, there is. Yeah, there is a Christmas special going on. Let's see. What am I doing here? Why am I? Thank you, Ray. Joe, there's lots of times where I'll get scared and close out a position, but then after it comes back and does what it's supposed to, I'll buy it back because, again, if I'm not worried about the 74 cents that I may have missed out on. I'm looking for this trade to do another $12 move. So if I get stopped out of something because it's not acting like it should, but then it turns around and does what it should, I'll buy back in. That just means my cost is a few cents more. Blank Wave 3 price projection, I think up in about 55. If you count this as a 25-point move, from right about here, another 25 points puts you into the $55 range. Now, will it get there? No, but the projection makes it probable, or a good probability that it could get there. But what keeps me in this trade? As long as I don't see a sell signal. wave 1, wave 2, wave 3 is nothing more than just seeing this move, and then this move. It's nothing of any high technical analysis. It's just kind of figuring prices move in waves because of human nature. We did TTCF. Your wave 1, wave 2 J-hook pattern, wave 3. Now you stay long and watch to see what everybody else is watching. Maybe right here. Just become a little bit more attuned to when you might see a sell signal, especially up here in the overbought area. So from the breakout point, just kind of, you don't have to be real exact. If this is wave 1, figure this is starting wave 3. I'm going to calculate that if this was 25 points, somewhere up around the mid-50s is where I should be watching, or become a little bit more diligent as to when I might see some profit taking set in. Let's see, make sure I didn't. That's almost a McMuffin. It's still a good buy, but it's almost a McMuffin. Usually you want to see that doji up near the top end of the previous candle. Yeah, so a J-hook pattern is just basically a wave 1, wave 2, wave 3. All right, and Kohu is in wave 4. Well, yeah, I don't even go that far. That's wave 1, wave 2, wave 3. That's wave 1, that's wave 2, that's wave 3. Because I'm not going to hold it because of wave 3, 5, 7, or whatever. I'm looking at, if I'm buying right now, what's my next prospect? Wave 1 and wave 3. CB, I pick out a different criteria of what maintains this uptrend. And right now, it might be that I would go to a weekly chart. And it's kind of moved too far away from the weekly chart. But it also looks like wave 1, wave 2, wave 3. So on a longer term chart, I might, well, in this case it's moved pretty fast, may use the T or the 50. Edwin, yeah, we're having problems still, and Abraham's been trying to work on it. One of our mailing servers has had a major glitch in it, and so we're trying to correct that. Yeah, so wave 1, 2, and 3 is not part of Elliott wave analysis. Elliott wave analysis was merely a good study to show that prices do move in waves. But I'm not going to hold for wave 1, 2, 3, 4, 5 with an ABC retracement. I'm a swing trader, so my trades only last 2 to 10 trading days on average. I want to be seeing whether wave 1, wave 2, wave 3. If wave 3 is about the same magnitude as wave 1, then I'm getting ready to take profits up here, or more apt to be ready to take profits. So what was the question on this one? Oh, the projection. If it moves positive, I'd go wave 1, wave 2, wave 3, the same move as this, 30 points. That would take you up into maybe the 175 area. Yes. Now use trailing stops, because percentages do not mean a hill of beans. Whoops, that's weekly. No wonder it looks different. So if I'm long, I may, and again, on this case, I might have a stop right here that says if it closes below the T-line, close me out. Up here, now up in the overbought area, I might say, all right, if it opens and starts trading below, or in this case, if it gaps up, remember what our simple trading rule is. If they're gapping up in the overbought condition and immediately selling off, you put your stop at the previous day's close. If it gaps up and trades up, you put your stop at where it opens, because logic says if it comes back down through there, that's where you want to start taking profits. So this one's been stopped out because it did a bearish engulfing and actually closed below this level in the overbought area. However, we've still got it on our watch list, because if this starts doing a J-hook pattern, notice that it's never closed below the T-line yet. It might be another wave to the upside. Yes, MC, that's pretty much that. Wave 1 and wave 3 should be about the same. Should we hold swings more than 10 days? No, the swing trade is not based upon the time factor. The swing trade is based upon when do you see a buy signal and when do you see a sell signal. And it might, on average, be anywhere from 2 to 10 trading days. So it's not the time factor. Now, in something like this, if we were buying, how long would we hold? In this case, much longer than a 10-day trade, because of the simple element, it never closed back below the T-line. How do you decide whether to buy options or stock? Lane, that's usually based upon what you're trading. If you're trading options, you're trading options. If you're trading stocks, you're trading stocks. If you're trading options and stocks, you might say, all right, I'm going to trade stocks that are trading at $50 or greater, or $200 or greater. So, again, it's not a question of whether you trade options or stock. It's what do you like to trade? Are you an option trader? Are you a stock trader? Or a combination of both? Okay. So I guess with that, Jim, go ahead and do the double line. Oh, I know what I was going to do as a setup. But if we see a kicker signal right smack dab off the 50, that's something that we want to look for. As Jim, in 2.3 seconds, do the next double line. That's telling us these are the type of signals or patterns we want to get into. Microsoft is a toughie. It doesn't have big price moves. Now, right now, you could be long Microsoft. Looks like a little double doji setup. Moved up, consolidation, consolidation, moved up. That implies there's going to be more upside. Playa would not be long or short. That looks more like a sideways wedge formation. And Trox, that wouldn't be anything that I would rush back in, John, only because there's probably a ton of other charts out there that are a heck of a lot better. So on this one, you just say, yeah, I got stopped out. Let's go find something that looks more like this. Riot has had a little bit of difficulty, but it's still in this slow uptrend. It'd be, had some bad days here. If you like it, you can stay long as it stays above the T-line at this point. Not quite a morning star. Usually a morning star is at the bottom. It's just telling you it did kind of a left-right combo above the T-line, so it implies there's going to be more upside. EQT. Ron, there's nothing on that chart. If you're short, you can stay short, but if it opened positive tomorrow, I'd close it out. There's nothing on that chart that would make me want to be long or short right now, which is a long answer to say there's a lot better places to be. FVRR, slow curve. At least suspect the next move is up here at the top of the channel, which means there's a little bit more upside. And BGNE, you can stay long. Now that's your flat, indecisive trading. That's your uptrend. Now your analysis needs to be is that you can stay long as this stays up above the T line. And GEVO, nice breakout. Stay long. Just make sure your volume is good on these $2 stocks. PIC had the same type of setup, a big gap up, best friend. Implication is that there's going to be much more upside. Hoya, this one you can stay long as it doesn't close below the T line, but obviously you want to see this break out. If it starts waffling here, it tells you they're still having a hard time getting through the 50. IWN, oh boy, that one, if you were, you had a bearish engulfing, opened lower, and did not get back up above the T line, I would be, if it doesn't open positive, I'm taking it if you're long, it better open positive tomorrow and stay positive. Otherwise, if it opens lower tomorrow, you're probably more apt to start wanting to go short on this one. Oh, that's the Russell. Yeah, so that's been a bad day. Russell has usually been holding up pretty well, but you had a bearish engulfing signal on Friday. I wouldn't short it unless it opened lower tomorrow and started trading lower. That's when I'd especially short it if it came back down through today's open. Maxar, get ready to buy this one on positive trading. Giving you a J-hook pattern. TT, you can get ready to buy this one on positive trading. Confirming the bullish engulfing off the 50. Bullish engulfing on desktop metal. Another one you could be buying. eBay. No, I wouldn't short it yet, Jace, because it's come right back to the 50 and bounced. It probably isn't a good short. You still got the implication you're in an uptrend. You're bouncing off the 50. There's probably better shorts out there than this one. The VIX, can't see. I'm colorblind. Just partially. That opened positive and traded lower. Victor, I probably wouldn't be trading this one at all. If you are long, we have to see a very bearish open tomorrow for it to move higher. And space, you can see the inverted hammer, bullish confirmation. If you're short, I'd get ready to cover your short position if it opened positive tomorrow. That's your message. Meaning if this opens and starts trading positive, you can start buying it. The profit taking would be over. FSR, nothing. Right now, there's nothing to tell you to buy this one yet. There's better ones in that sector right now. LI, NIO, GP, those are the better ones. And CBAT, that one you get ready to buy. That's a good looking chart. And CSIQ, that one you can stay long. You can see how you had the dojis down here, but more importantly, you've broken through this level. So that makes it compelling that this now might be going into wave 3. And Bidu, you got shooting stars. Up here, you can see all the tails to the upside. If you're long, you stay long, but I'd have a safety stop at today is open. It shouldn't come back down through there. Oh, copper. Copper is still in a slow, steady uptrend. As long as it stays above the T line. That's didn't scroll fast enough. Sedge, just stay long. AG, the answer is where should you have been buying this one, CB? Down here. Now you're in an overbought condition. This is now, you should be asking, should we be getting ready to take profits? MBUU, all you can do here is stay long, as long as it stays above the T line. And very, nothing of any great magnitude here. If you're long, which you shouldn't be, but if you happen to be long, it definitely needs to open positive and trade positive. You don't want to see it close back below the T line. That would tell you there's not any energy in that uptrend. Micron, oh boy. If you shouldn't, I would probably have been out on this day with the third day closing below the T line. If you've happened to stay long, it has to open positive tomorrow. Gevo, stay long. Apple, did somebody say it's trading up after hours? If you like this one, you can continue. It's one of the, out of the biggies, it's kind of one of the best ones right now as far as the big ones. Nice breakout on this one. Just make sure your volume is good. Stay long on that one. Oh boy, I don't know what to tell you. Are we looking at the right one here? That's, yeah, I don't see anything on that chart. AVI. ALT. You can get ready to buy if it breaks out through here or breaks out through this level. Not the best looking chart right now. Wells Fargo, nothing. Would not be long or short. I'd be more apt to go long up here, showing that it broke out to the upside. The oils, we closed out the oils the other day when we started seeing sell signals. Apache's been closed out. Occidental was closed out. Again, because of your big evening star signals. And EOG, same scenario. ExxonMobil, all these have been closed out because they started losing steam. They had various left-right combos, not in the oils right now. We did pick, look for a 45 degree. The SPY, can't tell on that one, but it definitely has to open positive tomorrow. That one is, yeah, there's probably something wrong there, because I doubt if they traded up that high. But it needs to get back up above the T line. Ions, you can stay long on this. Getting up in the overbought area, probably put a stop right about in here. Wouldn't want to see it come back through that level. RW, no, I probably wouldn't be buying this one here. Yeah. No, you should be looking back and saying I should have been buying down here. I would be holding this one. So if you're buying up here, you're going to have to be a lot more scrutiny. This one, for some reason, is not coming up. Is that where it was trading? SN, I don't, for some reason, it's not coming up. iCar, Apple. I don't understand. Oh, do they have a car? Boeing stays short. Cover your short position if it starts trading positive. Solar winds, cover your short, especially if it opens positive tomorrow. And Salesforce, nothing to get excited about. I'd be, let me make this bigger. Yeah, you could stay long. It wouldn't be my first choice. Is that AL? AL looks like a belt hold. Another one you could be buying on positive trading tomorrow. And we did Genco. Genco you could buy because it's breaking out through this downward trend. All right, still lots of good. I wouldn't be afraid to be a buyer of this one if it's opening up at 5. Where is it now? 538. AI. Can't tell. Is that a new offering? Yeah, not enough information there, Edward, to give you a good evaluation. Obviously, it's still heading up. Hubs, you could be buying this one. It wouldn't be on the top of my list, but I'd be more apt to be holding it with the idea that it's still in an uptrend. All right, one more, and then we'll head off into the snow. You can stay long on this after the breakout. I'd use today's low as a stop. I know. I don't know what's going on there, Don. All right, everybody. Lots of good trades. Lots of good energy in this market. Some big potential price moves. All right, everybody, we'll see you bright and early in the chat rooms tomorrow. We'll see you then.